Welcome back to Sense Investor. March has been a good month for my dividend growth portfolio, and I wanted to update everyone on its progress. Hey everyone, it's Brandon. I love dividends so much that I made a video that showcases how much each company pays me to invest in them. Please watch until the end of the video because I'll reveal how much my dividend growth portfolio paid me in March. Also, if you find this information helpful, please like the video and subscribe to this channel for more dividend and personal finance videos. It helps my channel more than you know, and I genuinely appreciate your support. Now let's get started. Okay, so we're just going to do a quick summary of my account balance. I'm currently sitting at $17,039.14, and if you look at the return or the day change for Friday, I'm up $94.38, or basically 0.5%. That might be a little misleading because on Friday the market dropped about 2.5%, and the S&P 500 looked like an absolute bloodbath, almost like a scene out of the movie 300. So don't be fooled. I didn't actually make a profit on Friday. It's just because I transferred money and the transaction completed. And then I ended up purchasing some dividend stocks on Friday, which is great because I love purchasing dividend stocks on those red days in the market. So let's go ahead and move over and look at our first dividend stock that paid me a dividend in March. Digital Realty Trust, or DLR, is a real estate investment trust, or REIT for short, that operates and rents over 250 data centers in the United States, Europe, Asia, Canada, and Australia. You can see that they paid me a dividend of $2.69. And the amount of the dividend was $1.22 for holding 2.2 shares of the company. This company has been increasing their dividend for 17 plus years. And if you've been around the dividend investing world for some time, you'll know that any company that's been increasing their dividend for 10 years or more, that's an outward sign that the company is performing well and that they're doing a good job of passing money back to the shareholders. DLR has a nice average growth rate of 5.65%, which is about average for a lot of these companies, but still nice to see positive growth. The payout ratio, however, is on the high side at 78.38%. However, in their defense, they are a REIT, and REITs do have tax advantages for paying out more money to shareholders. So to be fair, 78% is really on the good side for a REIT. But still, just in general, as a general rule, you want to keep your payout ratio under 50%. But we'll let this one slide a little bit simply because it's a REIT. They have a current dividend yield of 3.26%. which is nice because it's between that sweet spot of 2 and 4%. A lot of dividend investors like to create a range where they like to invest in certain companies. For me, I like 2 to 4%. And it's not that I won't invest in a company that has a yield of lower than 2% or higher than 4%, but generally that's what I try to aim for. And then recently they've increased their quarterly dividend by 6 cents. So growth is good. Let's move on to the next company. So we've got Waste Management. Waste Management is an American waste management and environmental services company that provides services to nearly 21 million customers. If you ever see those trash trucks running around your city, they have the big WM on them. That is Waste Management, and they are here to stay. They're a great company. So they paid me $2.17. And the dividend amount was 65 cents, and I was holding 3.34 shares of Waste Management. They've been increasing their dividend for 19 years. Again, great timeline for increasing dividends, and I don't see that changing anytime soon, so I'll keep holding Waste Management. Here's another nice 5-year growth rate at 7.49%. Payout ratio is certainly on the average side, which is good to see, 47.42%. And their current dividend yield is at 1.65%, which is on the low side, but still, this is a great company. They increase their dividend by quite a bit every year. And I couldn't be happier with the growth of this company. And then recently they've increased their dividend by 7 cents. So good sign. Next, one of my favorite companies, or at least one of my favorite financial stocks, Goldman Sachs. Goldman Sachs is an American financial services company that provides investment banking, checking, and also the Marcus High Yield online savings account to millions of customers. Me personally, I use their high yield savings account for an emergency fund, and I couldn't be happier with the service and just the product in general. I really love. I love using it. So I, at the time, owned 1.77 shares, and the amount of the dividend was $2, and I was paid $3.54 by Goldman Sachs in March. They have been increasing their dividend for 5 years, which is definitely on the low side. But if you were to go and look at their 10-year and 15-year chart, 20-year chart, you would see that they have just a few either breaks or they stopped increasing their dividend. They didn't really ever stop paying their dividend, but it kind of flatlined for a little bit. And for a financial company, you're going to see that quite often. JP Morgan did the same thing. I believe Bank of America flatlined their dividend as well. So it's definitely not uncommon. But again, the growth on the 20-year chart tells a bigger story. It's always good to kind of zoom out on those charts and kind of relax. Okay, so they have a massive 5-year average growth rate of 22.76%. This is huge, guys. This is a huge increase. And if you look at their dividend history, if you look like a bar chart, you're going to see that dividend line way up from March, which is a good sign. I'm usually in the mindset that I don't like when they increase so high, but with the financial stocks, I'm a little more at ease when they do that. All right, so they have the payout ratio. It's on the very low side, which is excellent. You always want a low payout ratio, 14.07%. I absolutely love that because that means they're paying less out to their shareholders and more back into their company. They're very good about investing back into their company, and keeping it on the low side is a good thing. So current dividend yield, they're at 2.5%. Again, right in that sweet spot. I like to see that, especially with the financial companies. And in the third quarter, we're expecting a possible dividend increase. So good to know. I like holding Goldman Sachs. Lockheed Martin Corporation, LMT. Lockheed Martin is an American defense contractor that provides arms, defense, and information services to the United States federal government. They've had several contracts with the U.S. For quite some time, and I've been pretty happy with this company and its growth. At the time, I owned 0.46 shares. The dividend amount was $2.80 per share, and Lockheed Martin paid me $1.29. They've been increasing their dividend for 20 years. Again, a very good sign at 20 years. Nice 5-year growth, average growth rate, 9.25%. And another company with a payout ratio that's on the lower side at 39.81%. I love seeing the payout ratio on the low side. The current dividend yield, 2.51%. And if you look at their 10-year chart, they have a very smooth and reliable dividend history. I love watching the dividend history charts. In fact, in my next dividend video, I might include that if that's helpful for you guys. Let's move on to the next stock. Home Depot, one of my favorite companies and also one of my favorite stores to shop at. Home Depot is the largest United States home improvement retailer. It offers tools, appliances, installation services, and construction products. At the time, I owned 0.31 shares, and the dividend amount was $1.90. And Home Depot paid me 59 cents for holding their shares. They've been increasing their dividend for 13 years. They have a pretty massive 5-year growth rate, 18.27%. The payout ratio is on the average side, another good payout ratio, 44.14%. The current dividend yield is 2.53%, right in that sweet spot. Recently, they've increased their quarterly dividend by a quarter, which is actually a pretty large increase, which is why you're going to see the 5-year growth rate so high here. Let's look at the next screen. Duke Energy Corporation, DUK, ticker symbol DUK. Duke Energy is the largest power holding company in the United States and operates gas utilities, infrastructure, and commercial renewables. I was holding 2.29 shares, and the amount of the dividend was 99 cents. Duke Energy paid me $2.27. Not bad. They've been increasing their dividends for over 11 years. They have a low 5-year average growth rate of 2.95%, which it's not horrible, but I do like to see that at least 5 or higher. Here's another payout ratio that's on the average side. This is a mistake. They're actually on the high side at 74.57%. And the current dividend yield is 3.45%. What I do like about Duke is that they have a very consistent capital growth on their 10-year chart. So what money is not quite growing on the dividend side is being made up for on the capital growth side. So that brings us to Realty Income Corporation, ticker symbol O. This is by far and absolutely my favorite real estate stock to hold. Realty Income is a real estate investment trust, again, REIT for short. They operate commercial properties in the United States, Spain, and the United Kingdom. Realty Income also pays a monthly dividend, which is different than most of the other stocks in my portfolio. Most stocks pay out quarterly. Realty Income is going to pay you every month, which is really nice. Of course, the dividend is smaller because it's divided by 12 months in the year, but still nice. So I own 8.32 shares of Realty Income. The amount of the dividend that they paid out was 25 cents, and I was paid $2.08 for holding Realty Income. Realty Income has been increasing their dividend for 25 years and is one of the most solid companies out there for increasing their dividends. In fact, I believe they call themselves the monthly dividend company. You can see that over on the logo on the left side, and they are very proud of paying dividends. They have a low average growth rate of 3.67%, and the payout ratio is definitely on the extremely high side at 302%. Again, real estate REITs do have tax advantages for having higher payout ratios. This is quite a bit excessive though, but you can attribute most of that to current market conditions. Even with this, I am very happy holding Realty Income for the very foreseeable future. Okay, so their current dividend yield is at a very nice 4.03%. And again, they have an extremely solid history of paying monthly dividends. I love Realty Income. You'll hear this from dividend investors everywhere. This is one of the best companies that you can invest in if you're a dividend growth investor. Okay, McDonald's Corporation. McDonald's is an American fast food corporation that serves almost 70 million customers in over 100 countries and is the world's largest restaurant chain by revenue. I was holding 2.12 shares at the time of the dividend. McDonald's paid out $1.38 per share, and they paid me $2.92 for holding McDonald's. McDonald's has increased their dividend for over 13 years, and they have a nice 5-year compound average growth rate of 7.85%. The payout ratio is on the average side, 46.57%, and their current dividend yield is 2.21%. I love that dividend yield, especially with a growth rate like this, 7.85%. I absolutely love it. Again, if you zoom out, look at their 10-year growth chart, you're going to see a very consistent capital growth. You'll see a nice dividend growth as well, but I mean, especially look at that capital growth chart. Here we have the 3M company, MMM, ticker symbol MMM. The 3M company is an American conglomerate corporation that produces thousands of products such as adhesives, laminates, window films, personal protective equipment. If you go to any grocery store, if you go to Walgreens, Walmart, Target, go anywhere, you're going to find a product by 3M. It's one of the reasons why I hold them in my portfolio, because their products are literally everywhere, whether it's from industrial to consumer products. You can find 3M probably in many spots in your own home if you look around. So at the time, I held 2.36 shares, and the dividend they paid out was $1.49 a share. So they ended up paying me $3.51. Not bad. 3M is a dividend king, which means they've been paying their dividends, or I should say they've been increasing their dividend and paying it for over 50 years. 3M is a magnificent dividend stock that has been increasing their dividend payouts for 63 years. Guys, that's insane. Go back 63 years and imagine what your life looked like if you were even born or alive. That's how long they've been paying dividends. So I'm very happy holding 3M into the future. I don't see this changing. I absolutely love holding 3M. They have a nice 5-year average growth rate, 5.65%. It's not too high, not too low. The payout ratio is a little on the high side, but it's not on the side where you want to be worried about their payout ratio. So I'm happy with the payout ratio. Current dividend yield is at a very nice 4%. And they recently increased their quarterly dividend by 1 penny, which is very conservative, but consider the climate of our society right now. 1% is not bad considering where we're at. Okay, Walgreens Boots Alliance. Walgreens Boots Alliance is a holding company that owns the retail pharmacy chains Walgreens and Boots. In addition to pharmaceutical products and services, Walgreens sells food, cosmetics, and office supplies, and a whole lot more, to be fair. At the time, I was holding 8.54 shares. The dividend amount was 48 cents, and I ended up getting paid $4.10 in March by Walgreens Boots. Thanks, Walgreens. They've been increasing their dividend for 7 years. They have a good average growth rate of 5.05%. The payout ratio is on the low side, where I love to see it in the 30s, 32.65%. Again, the current dividend yield is 4.19%. This is a really, really nice dividend yield, especially for a company with such a low payout ratio. I have no fear and no worries that they're going to continue paying their dividends into the future. They've also been paying dividends for 45 years, which I love. So I absolutely love holding this stock. Not much else I can say. I love Walgreens. Exxon Mobil Corporation, ticker symbol XOM. Exxon Mobil is an American oil and gas corporation with brands such as Exxon Mobil and Exxon Mobil chemical brands. In 2017, ExxonMobil was ranked the 10th most profitable company in the Fortune 500. At the time, I was holding 7.61 shares, and the dividend amount was 88 cents. That brings my total payout from ExxonMobil to $6.70 in the month of March. This is one of those stocks that some people love to hold and some people hate to hold. Because the oil industry and the energy industry in general is just so cyclical. So, 2 years ago when people were really hating on ExxonMobil, that's when I was buying ExxonMobil. And maybe at the end of the video I'll show you, but I have ExxonMobil literally at the top of my dividend portfolio in terms of capital growth. I have the most profit from ExxonMobil. So I don't really fear investing in the oil company right now. I know EVs kind of are the talk of the future, and eventually we'll move to EVs, but for now I am very happy holding ExxonMobil. Okay, so they have been increasing their dividend for one whole magnificent year. They did pause the increases for a couple years during the COVID pandemic, and they recently increased their dividend by 1 cent. And I expect them to continue increasing their dividend, even if it's very conservatively, into the foreseeable future. Right now, they have a low average growth rate of 3.13%. Obviously, when you don't grow your dividend, that average growth rate is going to be on the low side. Payout ratio is on the high side at 64.87%. This has actually come down. ExxonMobil's payout ratio used to be much higher, but I believe during the pandemic they took out some more loans and kind of rearranged the way that they have their debt situated, and so they found a way to pay out more to shareholders and or I should say less to shareholders and more back into their company to change the payout ratio. The current dividend yield is at 4.13%, which is really nice. It was really nice 2 years ago when it was at 7 and 8%. I think it hit 8%. That's when I bought ExxonMobil in the 6, 7, and 7.5 range. But for now, this is a really terrific yield for ExxonMobil. And then, of course, I mentioned they increased their quarterly dividend by a penny. Next up, we have a competitor, Chevron Corporation, ticker symbol CVX. Chevron is an American energy corporation invested in numerous aspects of the oil and gas industries, including chemical manufacturing, power generation, and hydrocarbon production. I owned 3.03 shares at the time, and the amount of the dividend was $1.42 per share, and Chevron Corporation paid me $4.30 in the month of March. Not bad. They've been increasing their dividend for 6 years. They have a fairly average compound average growth rate of 4.82%, and their payout ratio is similar to ExxonMobil. They're on the high side, but not in the scary side, at 65.31%. Current dividend yield is 3.53%. Very nice. I couldn't be happier with that dividend yield. And they recently increased their quarterly dividend by 8 cents. So next up we have Microsoft Corporation, ticker symbol MSFT. Microsoft is an American energy technology corporation that produces personal computers, operating systems, and business software, and also runs the gaming division, Microsoft Gaming. Many of you may be familiar with Xbox and that side of the Microsoft Corporation. At the time, I owned $1.90. I owned 1.9 shares of Microsoft, and the amount of the dividend was 62 cents. So Microsoft ended up paying me $1.18 in the month of March. Now this, let's look on the next screen. So the dividend yield is 0.91%. Microsoft has a pretty low dividend yield, and the reason I still invest in Microsoft is because, number one, they always have a very high 5-year average growth rate. Yes, their dividend yield is small now, but 5 years from now, 10 years from now, 15 years from now, that growth is going to pay off significantly. This is a company I believe in and I am planning to hold for the next 20 plus years and probably well into retirement. They've been increasing their dividend for 18 years, and they have an excellent payout ratio, which is on the low side at 26.61%. Another reason why I love holding this particular stock. If you look at their 10-year chart, they have one of the most beautiful 10-year capital growth visualizations that I've ever seen, and what a terrific company it's been in terms of growth. That brings us to the Target Corporation, ticker symbol TGT. Target, a place I shop at regularly, is the 8th largest big box department store in the United States, and they operate more than 1,900 retail locations as of 2021. At the time, I owned 2.34 shares, and the amount of the dividend they paid was 90 cents per share, and I ended up receiving $2.11 from Target in March. They've been increasing their dividends for 53 years. And again, this is another Dividend King company, an excellent Dividend King. stock that I believe every dividend growth investor should hold in their portfolio. I love Target. And they also have a good average growth rate of 7.45%. Their payout ratio is on the low side at 23.32. That's an excellent payout ratio. And they have a lower dividend yield at 1.49%. But again, when you have such high compound growth, you have such a good payout ratio, and such an excellent history of paying dividends for over 50 years, there's no reason not to hold this company. Look to see dividend increases in the third quarter, possibly. I can't expect that they wouldn't, but I totally expect that they're going to increase their dividend in quarter three. International Business Machines, IBM. IBM is an American technology corporation that produces and sells computer hardware, middleware, and software, and provides hosting and mainframe computers and nanotechnologies. At the time, I owned 4.41 shares. Dividend was in the amount of $1.64, and IBM paid me a massive, massive $7.24. Thank you, IBM. They've been increasing their dividend for 22 years. They have a nice average growth rate of 3.7%, slightly on the low side, but not bad. Payout ratio is a bit on the high side, 68.44%, and the current dividend yield sits at 4.75%. What do we have here? So they've also increased their quarterly dividend by 7 cents recently, which is a pretty nice increase. I think because their payout ratio is at 68% and their dividend yield is at 4.75%, this one does worry me a little bit. I think their dividend increase shouldn't be at 7%. I think they should have that closer to 1 or 2 cents for the quarter. That's just my opinion, but I think they're trying to strike a number that's too high. Emerson Electric Company, EMR, is an American industrial corporation that manufactures and provides engineering products for industrial and commercial products from over 200 locations. Okay, this IBM is clearly a typo. Just ignore that. So the number of shares that I held at the time was 0.85, and the amount of the dividend was 52 cents per share. Emerson Electric paid me 44 cents in the month of March. They've been increasing their dividends for 64 years. They have a very low 5-year average growth rate of 1.33%, and their payout ratio is on the average side at 46.99%. Current dividend yield is 2.2%, and they recently increased their dividend by 2 cents. So this is what I like to see. When you have a payout ratio that's right around average or a little bit higher, don't get too cocky with your dividend increases. This is exactly what I like to see. And again, this is probably why their dividend growth rate is sitting at 1.33%. That brings us to Johnson & Johnson, one of my absolute favorite dividend stocks ever, guys. This is one of the best ones. Johnson & Johnson is an American healthcare corporation that develops pharmaceuticals and consumer goods. It is one of the most valuable companies globally with over 144,000 employees. If you go to the grocery store, or again, Walgreens, Target, Walmart, any of these places, you're going to find products from Johnson & Johnson. They will be there. I had 2.75 shares, 2.25, and the amount of the dividend was $1.06 a share. Johnson & Johnson paid me $2.91. They've been increasing their dividend for 59 years, which is absolutely insane and incredible. On top of that, they have a 5-year average growth rate of 5.79%, which is amazing, and a payout ratio that's on the average side, 42.91%. I absolutely love what this company is doing. They're being very conservative, but at the same time, they're giving money out to the shareholders. Current dividend yield is sitting at 2.49%, which is a very nice dividend yield, and they recently increased their quarterly dividend by 7 cents. Very nice. Here we have the Southern Company. Southern Company is an American electric company and is the second largest utility company in the United States based on its 9 million customer base. I own, or I should say I owned at the time, 5.98 shares of SO, and the amount of the dividend was 66 cents. So I was paid $3.95 from the Southern Company. Thank you, Southern Company. They've been increasing their dividend for a very impressive 20 years. They have a good 5-year average growth rate of 3.34%, and the payout ratio is on the high side for this stock. Again, some of the utility companies are going to have higher payout ratios. REITs are going to have the higher payout ratios. They have a nice current dividend yield, 3.58%, and they recently increased their dividend by 2 cents. Nice and conservative. I love to see this. If this dividend increase here would be more around the 6, 8, or 10 cents increase, and they have a payout ratio at 76, that might worry me. Let's move on to the next dividend stock. Pfizer, ticker symbol PFE, is an American pharmaceutical and biotech corporation that produces medicine and vaccines. It played an enormous role in the production of the vaccines during the COVID-19 pandemic. If you received a COVID-19 vaccination, there is a good possibility that you received a vaccination from Pfizer. At the time, I held 10.98 shares, and the amount of the dividend was 40 cents. So Pfizer, in the month of March, paid me $4.39. Not bad. They've been increasing their dividend for 12 years. They have a nice average growth rate of 6.32%. Another terrific company with the payout ratio on the low side, 35.29%. I love to see that. And the current dividend yield is sitting at 3.32%. Excellent dividend yield, even if you're buying into Pfizer today. And here we have another conservative dividend increase, 1 penny. That is on the low side for the payout ratio and the dividend yield that they have. However, I would say they're being a little bit conservative because not as many people are going to be, putting those vaccines in their body at this point. That ship has kind of sailed most of its path, and they're going to take the conservative route from here. I love to see that. Intel Corporation, ticker symbol INTC, is an American technology company that develops and manufactures semiconductor chips for personal computers. It is the developer of the popular x86 series of microprocessors. At the time, I had 7.76 shares, and the amount of the dividend was 37 cents. And so Intel paid me $2.87. I love investing in companies like Intel and Microsoft and Apple because I'm a software guy myself. I love the technology field and the industry in general, so I love holding these kind of stocks. Intel has increased its dividend for 19 impressive years. I love to see that. They have a good 5-year average growth rate of 6.24% and a very low payout ratio of 25.41%. Absolutely excellent. So we have a current dividend yield at 3.14%, which I love to see. That's such a good dividend yield. It's right in that sweet spot where I like to invest. And then they've recently increased their dividend by 2 cents. That's absolutely brilliant. I love where they're at. I love this stock. And that brings us to Aflac Incorporated, ticker symbol AFL. Aflac is an American insurance company and is best known for its payroll deduction insurance coverage. It's one of the largest health and life insurance providers in the United States. At the time, I held 5.68 shares, and the dividend was paid at 40 cents a share. So Aflac paid me $2.27 in March of 2022. Another really good company here, we have a Dividend Aristocrat. They've been paying their dividend and increasing for 39 years. And the Aristocrats are dividends that have been paying and increasing their dividends for, I believe it's 25 years. And this is one of those companies. So they have a pretty high, actually I think it's the highest on this list, average growth rate of 10.60%. That's absolutely incredible. And the payout ratio is on the low side, 24.04%. Again, that is perfect. I couldn't expect anything more from this company. Their dividend yield is sitting at 2.52%, which I like, and they've recently increased their dividend by 7 cents. And here you see that reflected in the average growth rate over the last 5 years. Terrific. So this brings us to the end of the stocks, the dividend stocks that have paid me dividends in the month of March. Next, I'm going to go over and show you total what I've been paid from all of these dividend stocks. You could total up yourself if you want, but I urge you to watch the rest of the video and I can show you some pretty nice charts in my Schwab account. This screen shows my total investment income, and it breaks it down by a couple different ways. The first is annually. So if I were to click here, you could go through and you could see exactly what I was paid out each year. So if I went to March of last year, again, this is March of 2021, I was paid a total of $33.09 in dividends. However, if I switch to this year, you can see growth here. I was paid $63.52 in dividends. These are the companies, the 20 companies that we just went through and broke down dividend payouts for each company. These total up to $63.52. Not bad. And if you look up here, I have an average monthly investment income of $41.53. I like to see this number because it kind of tells me how I'm doing over time. Because if you look at some of these bar charts or these little bars down here, for the month of March, I get paid more. For the month of June, I get paid more. September, December, etc. And if I go over to May and April, they're on the lower side. And that's just because I own more stocks that pay out dividends and more shares of stocks that are paying more dividends in these particular months. These are the most popular months when companies usually pay out their dividends. So when I do my video next month for April, it'll be a little bit higher than this, but you've got a good idea of what you're going to expect. So the other nice thing that I like to know is the actual investment income that's expected for this year. The total for 2022, I'm expected to receive $498.34 in dividends. That's not bad for doing nothing other than just holding a stock for a company. All I did was buy it, and then, I kind of go to work, I go to sleep at night, I pretty much do nothing. And then I wake up some days and they're like, hey, here's a dividend, here's some money just for holding a small portion of our company. I absolutely love that. But my favorite metric is going over to the next 12 months, where it shows me I'm expected to make $515 in the next 12 months. These are the kind of numbers that I love looking at, because when I take a step back, it's nice to see the dividend payouts for each of the individual companies, but when I take a step back and I look at the annual income, as it grows larger and larger each year, I start to think of it more like a salary. I start to think, okay, this is what I am making doing this quote unquote dividend investing job in my spare time. This is what I make as a salary. And $515 may not seem like much, and it's really not. But over time, that number is going up dramatically fast. So next year it'll be higher. The year after that, it'll be higher. And then, of course, over time, it will just snowball out of control as I earn more incomes over time. Earn more dividends over time. And I love looking at these numbers. So I urge you to look at these numbers yourself if you have a dividend investing account, instead of just looking at the individual payouts, because it's just really easy for us dividend investors to look at those cents. And I know this channel is called Cents Investor, and it is all about cents. But you also have to zoom out and look at that bigger picture. And that's really motivating to me, and I hope it motivates you as well. Well, that's it for this video. Don't forget to like and subscribe to this channel. Thanks again for watching, and I'll see you next time.